Depreciation. As you know, what is depreciation? It is reduction in the usable value of the fixed assets due to effluxion of time, normal wear and tear, or obsolescence. Obsolescence means where it is no longer useful to me. So it is a indirect non-cash expenditure. We know all those things. So, I mean, let's just discuss the concept of depreciation. Right? The concept of depreciation, let me just, talk about it for a while. Concept of depreciation. What is there in Companies Act and what is there in Income Tax Act? Guys, if you go to Companies Act, strangely, correct? If you go to Companies Act has 470 odd sections and various 7 schedules. 7 schedules. Sir, why are you keeping on going to Companies Act? I always tell the source of everything is company law. I'm not joking. So based on that only, many things have come. I used to tell this in my company law classes and I still, strongly believe so. If you see schedule number 2 of Companies Act, and since we are using the Bayer Act methodology, which is the only way to study correctly, the only correct way to study any law for that matter. So we have to digress slightly and connect it later. Okay. Now, if you see section 123 talks about the declaration of dividend. Is depreciation, what do you say, mandatory? Actually, if you go to section 123, it doesn't say that depreciation has to be done or not done, nothing. But if you see everywhere it says here, if you want to declare dividend, then you have to provide for depreciation. Correct? So first of all, do I have to follow depreciation? If you see as per section 123 of which law? Companies Act. Section numbers, whatever I am telling, please ignore. I am just giving you the concept. Kindly understand the concept. And I gave you a disclaimer in the first class, and every class I am giving, first 10 to 15 classes, you'll be like, what the hell is this fellow teaching? You will definitely feel like that. I'm not joking. 100%. If you don't feel like that, then something is wrong with you. Correct? So the thing is, later it's all pieces of a puzzle. Later it will all come into play. Right? So because of the confidence that students have given me that they are easily understanding the company law, in-depth analysis of company law and economic laws, and they have been encouraging me to start income tax for almost 3 years now, I thought I'll just take the plunge because, during my articleship also, predominantly I worked on income tax cases. All the practical exposure that I've got is because of income tax. Actually, I've understood one thing that time. Now everything is faceless, but that time I've understood that you also have to be a good people's person because you have to speak to the assessing officer and all that. So I have had amazing experience in terms of at least speaking to people, apart from the law, of course, that is one good thing. A second thing is speaking to the people, how to convince people, at a young age when doing articleship itself, I understood, and that is the reason why, your first love, always you should revisit sometime, right? They tell one dialogue that if you truly love somebody, let that somebody go. And if that person is meant to be yours, will come. So income tax, after articleship, I left for a brief period and concentrated on other things, but the true love has eventually come back, so to speak. Anyway, guys, thanks to your support. So you are the reason why me and my old lover is now back. Yes. So coming back, no dividend shall be. So coolly listen, cool, no problem. No section number, bhad mein jao, let it go to hell. Okay. So if you see dividend declaration, because of for dividend declaration only, what do you need? You need depreciation. Now come back to depreciation schedule. Where is the depreciation schedule? Schedule number 2. Sir, where, sir? Sir, not income tax, sir. It is in company law. Sir, why are you going back to company law? Company law, why are you going back? Because company law is the mother law. Whether you like it or not, that's the truth. Because of company law, you have costing. Because of company law, you have income tax. Because of company law, you have FM. Because of company law, you have auditing, everything. Right? Yes. Because of company law, you have FR also. Yes. So if you see schedule number 2, section 123, it says useful life to compute depreciation. So my dear friends, in Companies Act, when you have to go to depreciation, and also every company has to follow accounting standards. So of course there's a accounting standard for Ind AS for depreciation. That's the reason why companies have to follow depreciation, otherwise it is not needed. Okay, so basically because of the mandate as per accounting standards, plus if at all you want to give dividend, all your profits have to be, first charged, all your income, etc. First, what adjustment do you have to do for profits? It has to be depreciation adjustment. Now, useful life to compute depreciation, if you see, there is an allocation methodology and there are, revenue, etc. and years given. So these things, years are given now, years, 30 years, 5 years, 33 years, 30 years, that's it. So simple method, if the plant and machinery costs, 15 lakhs, 15 lakhs divided by 15. So 1 lakh every year for 15 years, chapter close. This is the schedule that they have followed. Earlier, there used to be rates. In 1956 law, there used to be rates. In 2013, useful life is given. So for example, if you are into gas storage and distribution, 30 years. So if your thing is 3 crore, 3 crore divided by 30. 10 lakhs for 30 years is what you need to do. That's what I'm trying to tell. This is how it is going to be. Now, what is it in income tax? Believe it or not, my dear friends, in income tax also, it was similar. As I told you here, in 1956, it was a fixed rate given. And in 2013 onwards, you have given useful life. Income tax also, I am talking about the year when I was also not born, in the assessment year 87, 88. Assessment year 87, 88, which means previous year 86, 87. Previous year is 86, 87. So in this, year number 1, for example, and asset A, asset B, asset C. How was it, guys? The cost of the asset, for example, cost of the asset, let's take 2 lakhs. Let's keep it simple, 2 lakhs, 2 lakhs, 2 lakhs. Just keep it simple for example purposes only. Less depreciation, let us say 10%. Depreciation 10%. How much? 20K, 20K, 20K. How much will it be? 1,80,000, 1,80,000, 1,80,000. Fair enough. Fair enough. 1,80,000 is what it says. Now, in year number 2, let's take 2 different cases. Are you with me? In year number 2, let me take 2 different cases. If you want, you can note down this example, otherwise just listen. It's okay. Nothing to worry. Don't worry. Okay. So year number 2, what is the scene, guys? Year number 2, let us say asset A is sold at 1,44,000. Case number 1. Correct. One more case, asset A is sold at, this case number 2, 1,96,000. If you observe here, my dear friends, if you observe here, in the first case, it is sold at a loss. In the second case, it is sold as at a profit. So what used to be before, when, sir? 35, 36 years ago. What used to be there before? If asset were sold, how will you look at it from year number 2? Year number 2 onwards, if you see the asset A, B, C, cost, or rather the written down value now, and the depreciation allowed, whatever. Here it is 1,80,000, 1,80,000, right? So depreciation will be 18,000, 18,000. This would be what? 1,62,000, 1,62,000. This, there would be a loss. 1,80,000 minus, 1,44,000 minus 1,80,000, 36,000, right? 36,000 loss. This 36,000 loss was allowed in income tax law as terminal depreciation. What I am trying to tell is, in the old law, 86-87, it was a single asset method, just like Companies Act. Single asset method. You buy that plant and machinery, divided by 15 years. 5 years later, you buy one more plant and machinery, divided by 15 years. Single asset methodology. On the other hand, this case number 2, when I earn a profit. On the other hand, for a profit scenario, I continue here. Guys, B and C will remain the same. Same thing. A. How much profit I have made? 16,000 profit. 16,000 profit is taxable as PGBP under the head balancing charge. This was the scene 35-36 years ago, my dear friends. Single asset method. Amendment was brought about from assessment year 88-89 onwards. Single asset method was now shifted to the block of assets concept. Block of assets. So my dear friends, now assets of a similar class is now divided into block. So if you have different plant and machinery, this is just on paper. Just on paper. Mind you, nothing else, just on paper. Depreciation section is section 32. Let me open that for you. Depreciation section is section 32. So deadly chapter, very important chapter, depreciation. 4 to 6 marks, the depreciation chapter. 4 to 6 marks as adjustments it will come, guys. So depreciation chapter. 4 to 6 marks as adjustments in total income problem or MCQ or sometimes standalone. 4 to 6 marks. Right? Important. Very important. In respect of determination of this given here. In case of any block of assets, such percentage, correct, on the written down value thereof, at the prescribed percentage, whatever it is, block of assets. And then here they have given, see, in respect of depreciation of buildings, machinery, plant or furniture being tangible assets, know-how, patents, copyright, trademark, license, franchisee, or any other business or commercial right of similar nature being intangible assets. Tangible assets, intangible assets. To simplify, please come to page number B7. So if you see the depreciation chapter under section 32, all these things will be doing. Conditions for claiming depreciation, class of assets, rates of depreciation, block of assets, method of depreciation. One is WDV, one is actual cost method. Where, how did I make this chart? How did I decode the Bayer Act? Check it out. Block of assets. So here it says what? Block of assets, such percentage on the written down value. In case of assets of an undertaking engaged in generation or distribution of power, such percentage on the actual cost thereof. So the methods of depreciation are two types. WDV method, actual cost method. Actual cost, think about it, it's for electricity. We'll see that later. Otherwise WDV. And it is on what? Block. And on 32 1 it says block means tangible, intangible. Intangible, you have building, furniture, plant and all those things, right? See here, building, machinery, plant or furniture. Right? Now, 10 types of depreciation. One is normal, one is additional. Future we will see. And depreciation of power sector undertaking, that is different thing. Then sale of assets in a block. We will do that. So today we will do this section 50 for sure. We'll see. Because based on that, I have to do something else. That's why. So follow this structure only, whatever I am doing. If you want in your Excel sheet or in a, paper, whatever we are following, exact like that, you see. You can say, for example, depreciation. First this fellow did B7, depreciation definition. Then he did the chart. Then he went to some other section. If you write that structure also, you can write down if you want. That is if you want. Otherwise, you just follow this. Because once you finish the classes, you will be obviously studying from page number 1 to page number whatever it is. 68 pages in this, like that only you will study. Here when I am doing the classes, I cannot put that structure because it should be in a methodical way. I mean, at least when you are studying, revising, etc. But when you are doing the classes, I need to digress, go somewhere else, come back here, go somewhere else, come back here. And then once you study everything, then you can go in a structure. As I told you, puzzles everywhere. Puzzle, 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 puzzle. And this material is the fully completed puzzle, which you will appreciate 100% after the classes are over. Okay? Right. This is the only way to study the Bayer Act methodology. Bayer Act is not where only one section 1, 2, 3, 4, 5 you follow, next section you go. No, you will have to interconnect. I am doing it slowly. This is not like any other fast track batch which you had ever attended in your life. And this is not like full blown regular also. This is something in between. This much is enough for the examination. As I told you, you won't even know that it is something like fast track. You will feel like it's a regular batch only. Don't worry. Okay. So come to this next. You check P8. Yeah. So as you see, class of assets, tangible, intangible. That's what I read now. Building, furniture, plant and machinery. Building, furniture, machinery, plant or furniture being tangible assets. Because when you see the rates later, you will see this is what they have given. Building, furniture, plant and machinery. For building it's separate, furniture is separate, plant and machinery is different. Then intangible assets, patents, know-how, copyright, license, franchisees, etc. Correct? The franchise model, etc. We will see. What it means is, if I buy a building today, if I buy a building 3 years later, if I buy a building 5 years later, all put together will be dumped into a block. So coming back to the concept here, in 1989, 88, 89 assessment year onwards, the concept of single asset mechanism was thrown out, and on paper, everything was brought under a block. Everything was brought under a block. So everything was brought under a block. So if you see here, this thing itself, in respect of depreciation of building, machinery, plant, furniture, tangible assets, etc., wholly or partly by the SSC. By the SSC. Reliance Industries Limited is an SSC. They will have multiple businesses under them. Each company will have 50 plants. Second company will have 20 plants. Third company will have 40 plants. When Reliance Industries Limited is filing their tax returns, will they do company-wise or Reliance Industry SSC-wise? You see? Are you understanding what I am trying to tell? Does it say by the company? No. It says by the SSE. So Reliance Industries will on paper merge all the assets of the entire group here in Reliance Industries Limited. Entire thing they will merge. Plants in various branches, everything they will merge and they will put it in the block. So first and foremost, block concept. Second, it is not company wise, my dear friends. It is SSE wise. All businesses will be merged. All businesses will be merged. So generally what will happen? Generally what will happen? Every year there will be a opening WDV. To the opening WDV, what will you add? Actual cost of assets that are acquired during the year. Actual cost of assets acquired during the previous year. Actual cost of assets acquired during the previous year. Then you will subtract what? Whatever sales happened during the year. Sale of assets. Then what? Assets which are destroyed, maybe. Any scrap value that you get of the assets that you sold, that you sell. Any insurance compensation that you receive. We will do it in depth more later. I'm just giving you an example that you will do. Guys, this is of the full block. Everything that is there as on the beginning of the year I will add, plus whatever I buy. Reliance buys in different businesses, different machinery, add it to the block. Minus in different businesses, they will discard many things, subtract it. And finally, you will get WDV at the end of the year. The depreciation is always computed at the end of the year minus depreciation for that previous year. And will be what final, at the end of the day, what will it be? The WDV after the depreciation. Final figure. This will be the opening WDV of the next year. I will write this structure again. It's just for your understanding, just for your knowledge. I did. That's it. Taking this into account, let us merge these three things here. Let us merge. So, what would be the assets? 2 lakh plus 2 lakh plus 2 lakh. Assume all the three are in the same block. Let's say these are all buildings. Assume. Or these are just machinery, whatever it is. What will it be? So in the block concept, my dear friends, year 1, how much will it be? 6 lakhs. A plus B plus C. Opening WDV will obviously be nil. Nothing was there. During the year I've added A plus B plus C, 6 lakh. Minus sales, nothing. So WDV is 6 lakhs. Minus depreciation, 60,000. 5,40,000 was the WDV at the end of the year. And this WDV will go to year 2. 5,40,000 will be WDV of opening WDV of year 2. Opening WDV of year 2. In year 2, two scenarios. Scenario 1, scenario 2. In scenario 1, what had happened, guys? Asset A was sold. Or how much? Let me see this. How much had we sold it for, guys? I forgot. 1,44,000. One more is 1,96,000. Here A was sold at 1,96,000. This was sold at a loss, sold at a profit. Loss was 36,000. Generally, if you take on a standalone basis, Here profit was 16,000 if you take as a standalone basis. Just for your knowledge, I'm telling. Now tell me, how much will it be? Here opening WDV is 5,40,000 plus additions during the year nil. Subtract. Guys, from the entire block, I'm removing one asset. I don't care. Guys, think about it. When the asset enters into the block, get this in your mind, and the asset enters into the block, it loses its individual identity and it merges with the group. It merges with the group. So even though I sell whatever, that one asset at 1,44,000, I have to remove 1,44,000 from the entire pool. I have to remove 1,44,000 from the pool. So if I remove 1,44,000 from the pool, amount will be what? 3,96,000 rupees. 3,96,000 rupees. Right? 3,96,000 rupees. If you see here, if you see these two put together is 3,60,000. And this is anyway was a loss here. No, in the year 2 it was a loss. I told you 36K is allowed. So here 1,80,000, 1,80,000. Ideally it should have been what? 3,60,000 rupees. $3,60,000. The difference between the two is obviously 36,000. So the loss here of 36,000, I can conclude that the loss has increased the WDV. The loss has increased the WDV because I have sold it for a loss. It has increased the WDV by 36,000 rupees. But the beauty is this increased WDV will be allowed as depreciation over a number of years. I hope you are understanding, guys. No standalone method here. Here the WDV is increased. Basically, you will not claim any 36,000. That 36,000 increase will be claimed over the period of years because of depreciation. I hope you got that. Yes or no? Give me thumbs up here. Online people, thumbs up. Super. Very good. Cool. On the other hand, you guys, Google Drive fellows, thumbs up. I know this is a recorded class. I know it is very stupid. You may feel so, but no. Though whenever you are watching it, if you say, yes, sir, I understood, I'll feel happy. I'll sleep well. Done? Super. Now come here. Easy, easy. Cool. Again, if you didn't understand, please go through it and go through it again. No problem. Again, you have some 1.5, 1.8 X view, whatever. No, that's why it is given. So many views are given so that you can go back again and again and check out. Now here, similar guys. Here what has happened? Here what has happened? Same 5,40,000. 5,40,000. Correct, no? 5,40,000 minus 1,96,000. 5,40,000. How much? Let's calculate. 5,40,000 minus 1,90,000. Sorry, 5,40,000. 3,44,000 is coming. 3,44,000 if you compare with 3,60,000, again there is a profit of 16,000. The profit of 16,000 has decreased the WDV, correct? The profit of 16,000 has decreased the WDV. So that's it. This is the concept of what, guys, my dear friends? Block mechanism. This is the concept of block mechanism. Did you understand? Block mechanism. Block of assets. Block of assets. This is the block concept. So in depreciation, in depreciation. For example, if 20 computers are there, all these computers are in one block. 4 computers I will throw scrap, or let's say 6 computers I will throw as scrap. I will not recover anything. I will put it in Kannada they say Gujri. That fellow will come now outside shouting. So I'll give it to that fellow. Nothing can be, it's not switching on also. Right? Will there be any treatment in income tax books? Nope. Because once the thing goes into the block, assets are going out, minus sales, how much? 0. But assets are out. Correct? But out of 20, 20 also are scrapped out. What to do? There will be some value in the thing, but this will be 0. What to do? All that we'll see later. Don't worry. But this you leave. This much you understood, no? No treatment in income tax. No treatment in income tax. Let us enter into, with this basics, my dear friends, let us enter into the concept of depreciation. Let me change the battery. 1 second. Change the battery. I'll just pause the video. I have to change the battery. All right, guys. So, in depreciation, we will be studying these sections 32, 1, 2. Not necessarily in this sequence, but of course, we'll be mixing, matching, doing a lot of jugalbandi. This is about depreciation. This is additional depreciation. 43.6, that is WDV block concept, 43.6. Then we will be doing section number 50. This is capital gains on the sale of block. It's a special provision. I told you, no, 20 out of 20, if it goes, what to do? That will come here. 20 out of 20, if it goes, what to do? It will come, and other areas will come. We'll see that. Then we will be, after that, 43.1. Section 43.1 speaks about actual cost. Actual cost. Then we would be doing 32.2 in this sequence, 32.2. Carry forward set off of depreciation, 32.2. Then we would be doing 38.2. 38.2 partially used asset. Partially used asset. And finally 43A, exchange rate fluctuations. How to treat exchange rate fluctuations. So this is what we're going to be doing, my dear friends. So let's begin, of course, with depreciation. Correct? 32.1.2. We'll begin with that. Hey, doggy. Cute doggy. Yes, 32.1.2. Let's see. Okay. So here, this is what is given here, all these things. Right? We'll come back to that. We'll revisit. See, I'm going to show you the Bare Act and we're going to discuss in that later. We'll come and brush through all these provisions here so that you'll get full clarity. This is the made puzzle already. Now we are actually fitting in all the puzzle pieces. Okay. So bear with me. Of course, slow and steady only wins the race. So bear with me, my dear friends. Let us go into 32.1. Let's just read. Whenever I highlight certain words while reading, when I stress upon certain words, please keep it in mind. In respect of depreciation of Being of what? Buildings, machinery, plant or furniture. Buildings, comma, machinery, comma, plant. Plant and machinery should be read at once. Why? Because later the rates are similar. That's why. Or furniture. Or furniture means furniture will be separate. Being tangible assets. Being tangible assets. Being tangible assets. Then know-how, patents, copyrights, trademark, licenses, franchises, or any other business or commercial rights of similar nature, anything for that matter. Being intangible assets. Intangible assets acquired on or after April 1998. That you leave. One very, very important amendment with respect to Finance Act 2021, not being goodwill of a business or profession. Not being goodwill of a business or profession. Owned, wholly or partly by the SSE and used for the purpose of the business. Used for the purpose of business or profession. The following deduction shall be allowed. What is that following deductions? Block of assets concept at the prescribed rate. That we will see later. And there are many provisos and all that. I will condense it. Many explanations are there. Coolly we'll do it. No problem. Okay. So what did I tell you here? Again, come back. Tangible assets. Not being an intangible assets. Not being goodwill of a business. Owned wholly or partly by the company. No, by the SSE. And used for the purpose of business. Used for the purpose of business. So keywords, of course, obviously, what would be the keywords here? Tangible, intangible, no goodwill. Goodwill is excluded from the purview. Owned, wholly. All these keywords remember and go. Partly. By the SSE, my dear friends, not by the business, by the SSE. And then what? By the SSE, used for business. Personal use and all, if you do, won't have apply. In this we have already seen, no, SSE, which means you have to go not company wise, but it should be entire SSE wise. Not company wise, my dear friends. It should be SSE wise. SSE wise, not company wise. One by one. Building, machinery, plant or furniture. We will see those, each of these lines later. What does building mean, machinery mean, plant mean, furniture mean, all that we will see later. Because, first you have to understand the rates, and then what, basically anything that you can see, that building, machinery, plant, furniture, that is in one block. Right? In the sense, there are multiple blocks here, but what I'm saying is tangible assets, you have the three blocks here, that is buildings, plant and machinery, furniture. Three separate blocks, but under one major umbrella, that is tangible assets. Then you have other things. All these will be under intangible assets. Know-how, patent, copyright, correct? Or license, franchise, or any other business being intangible assets, that is acquired, that this you date, you leave it, doesn't matter. Now what is this owned, etc.? We will definitely see. Now, what is this? Let's see what do you mean by know-how. What is a know-how? We'll try to understand. Check it here. All these things they have given, proviso, expression, this heavy passenger vehicle, all these things they have given. See, basically you can keep on, yes, here. Know-how is given in explanation 4. Okay, explanation 4. Which explanation number and all really not needed, just understand. See, know-how means any industrial information or a technique likely to assist in the manufacture or processing of goods or in the working of a mine. So guys, industrial information. So basically you have Hero Honda. Hero Honda was a joint venture. So of course the marketing etc. was done by Hero, whereas the entire machinery, the engine etc. was all by Honda. So Honda provided, Hero with what? The technology. The technology was used by Honda. Maruti Suzuki for that example. All these things, it was Suzuki Motors who actually provided the technical information and that is industrial information or a technique, which of course will be assisting in the manufacturing or processing of the goods as such. Working of a mine, oil well, or any other mineral deposit. So basically, this mining etc. will happen in the deep seas. So this mining especially will happen in the deep sea. So there obviously will have a oil rig. The oil rig, large companies like Reliance etc. do all these things. There'll be an oil rig. So the entire exploration, this entire what do you say ducts that you will put inside to find oil and extract oil etc. for discovery. This will be outsourced to many people. I am taking technology from various people outside. Now that will be know-how. That of course would be know-how. So the crude oil extraction happens like that only. Oil rig I will import from somewhere. The duct technology from somewhere. The entire mechanism of extraction somewhere else. So obviously that's what it is. Then you would have seen this, in lifts and all. When you go to a lift, there are various lifts that are there. ThyssenKrupp is a lift company. The entire mechanism of the lift, right? So even if an Indian company wants to take the technology, they will take from, let's say, ThyssenKrupp, saying that, sir, I'm an Indian company. I want your German lift techniques. Please come and give it so that we can have a, sharing. We'll give you money, you pay me money, I'll pay you whatever is on every sale, I'll pay you a percentage, or I'll outright purchase the at least take the license of this entire thing. All those things would come under know-how. Got it? This much knowledge if you have, it's more than sufficient. So come back here. Or other sources of mineral deposits, including searching for discovery, I told you, or testing of deposits for winning of access thereto. So all these things. So basically, even when you test the deposit of crude oil or anything for that matter, so basically there, that will be called as my know-how. That will be called as a know-how. Got it? So that is my point number 2. Now, as far as here, come back here, that is know-how. Then of course you know the other things. You have patents, copyrights, trademark, etc. Now J.K. Rowling gave her entire rights of her book to Warner Brothers for making the movie Harry Potter series. Of course, that would be what, right? The copyright she gave, right? For J.K. Rowling, what is the tax treatment? We have to see royalty and other things later. If she were an Indian, I'm just saying. Trademark, license, franchise, etc. Even she has given to a theater in UK the rights of Harry Potter and the Cursed Child. So Cursed Child, where the entire thing is adapted into a play. She's written also a play like that. Then one more of her plays, Casual Vacancy. It's not Casual Vacancy Director. The name of the play only is Casual Vacancy. So that also is given. Anyway, that royalty etc. will come. So one business, if it gives the franchise also. So in Bangalore, there's a very famous ice cream parlor which I love called Corner House. Corner House Ice Creams is very, very famous in Bangalore. So they give out franchises. There are many franchises in Bangalore. Now they predominantly don't want to go outside Karnataka. Maybe I think it's in Karnataka there's in Bangalore and Mysore. That's it. So they have not decided to go outside, Bangalore. Forget about Karnataka as such. Yes, but they have a franchise model. Now, if I take the franchise of KFC, if I take the franchise of Creamstone Creamery, whatever it is, then of course the fees that you receive would, and also whatever that amount, that intangible asset that you buy the franchise, that intangible asset, that would be what? A intangible asset for which depreciation can be claimed. Okay, those are the examples. Now, what about commercial rights acquired or any other right for that matter? Any business or commercial rights of similar nature? Anything that you acquire which comes under patents, copyright, trademark, license, franchise, etc. Mining license you have to obtain. Correct? They'll only give it to you. Even stock market in the olden days, when the stock market came into force, though the stock market is there for over 100 plus years, when it was corporatized And before corporatization, the Bombay Stock Exchange only had some, if I'm not wrong, some 5,000 licenses. Now there are multiple, but that time it only 5,000 licenses. Can I sell that license? Means I'm a stockbroker. I have a right to do the broking services there. Can I sell that to somebody else? Yes. So when I buy the right to trade in the market, when I am a company buying the right to trade in the market, that will be an intangible asset. These examples, I think, should be good enough for us to understand. Now, what do you mean by owned? What do you mean by owned? So, owned means what? So, let us say I have a motor vehicle. So, all that we've discussed, tangible, intangible, goodwill part, I'll come to that, guys. Owned. What do you mean by owned? Owned. So, basically, let's say I am, owner of motor vehicles, let us say, and I have given the vehicles on lease to XYZ. As per the Motor Vehicles Act, the moment you give it on a lease, you will be a lessor, you will be a lessee. The moment you give it on a lease to a company or anybody, as per the Motor Vehicles Act, registration should be transferred in the name of XYZ. Registration must be transferred in the name of XYZ. So in this case, registration was transferred to whom? XYZ. Now the question is, when I use the word owned, does it mean that the registered owner or the benefits of the vehicle, whether it's lease rent or eventually once the lease gets over, the vehicles will be given to whom? Will be given back to the owner. So the owner here, let's say Mr. Benz, stupid name will give, Mr. Benz. The owner, Mr. Benz, he is called as a beneficial owner. Why? All the benefits will come back to him anyway. For taxability purposes, what do you think? You should be a registered owner, XYZ, or beneficial owner. So who can claim depreciation? Depreciation can be claimed by the owner, that is beneficial owner, who is Mr. Benz, or who also happens to be the lessor, or is it the other company, XYZ, who is the lessee, who is the registered owner of the vehicle. What do you think, guys? What do you think? Come on. What do you think? Yes. So, guys, for this, there are many judgments. All of them tell the same thing. One. No need to remember any name. Don't worry. I'm just giving for your reference. Nitish Transport Corporation, Kerala, case law. Mysore Minerals, Supreme Court judgment. Here it was about building. Building was registered in one person's name under the Registration Act, and it was actually owned by somebody else. Correct? Possession was somebody else, and registration of the name under Registration Act was by somebody else. And there is also a CBDT circular. Anyway, in the Nitish Transport Corporation, and one more, ICDS versus Commissioner of Income Tax, Supreme Court. These two were about motor vehicles. In both the cases, they said registered owner is of no use. Registered owner is only needed as per Motor Vehicles Act, but I should see the beneficial owner. And only that beneficial owner, if is there, only that will make sense. Nothing else is what they said. And of course, there are certain tests that I have to look for. Obviously, tests that I have to look for. What are the requirements of this 32? One is ownership and usage in the course of, in ICDS, they were in the business of leasing out vehicles. So basically two tests are already done. One is, first of all, you are a owner. What way? Beneficial owner. Second one, you have used it in the business. We have seen, no, used it for the business here. If you remember, here, where did it go down? Here, used it for the business, correct? So as long as two things are there, nothing to worry is what they say. So then, of course, what, and through the lease deed itself, through the lease deed only we came to know that the, this ICDS company is the exclusive owner, and there was a lease period also, and at the end of the lease period, you had to return the vehicles, and you had the right of inspection also. Whenever you wanted, you could inspect. So all these characteristics boils down to the fact that you don't have to, what do you say, be the registered owner. So registration is not mandatory and mandatory as per Income Tax Act. What is needed? Beneficial ownership is what is needed. So it is, a registration is not determinative of ownership, as simple as that. Similarly, in Mysore Minerals also, with respect to the building, same thing happened. So building also, registration by somebody else doesn't matter. Who has, who owns it beneficially, who has given it, and who is using it for the business of letting out, all that matters. CBDT circular also was there because there was a lot of confusion with respect to accounting treatment versus income tax. In accounting, there are two types of leases: operating lease and finance lease. Under operating lease, the lessor is the person who gives the lease and the lessee is the other person. Under operating lease, lessor was capitalizing and claiming depreciation. Lessee was claiming an expense, lease rental. Whereas in finance lease, in many cases, lessor was not doing anything, whereas lessee was claiming depreciation by capitalizing, because in finance lease, the ownership will eventually be transferred. CBDT said, kindly ignore this. CBDT said, for the purposes of income tax law, depreciation will always and always and always be with the lessor only, because he is the true owner of the asset, irrespective of whatever is there in operating lease and finance lease. Clear, my dear friends? This is the meaning of the word owned. Income Tax Act, you shouldn't read it. You should own it. Yes or no? Yes, you should own the law. Correct? Right? Don't worry. Slowly. One Nityananda's one video is there. He'll tell in that. Slowly, like that. Slowly, we should understand. No problem. Comedy fellow is one. Tangible, intangible. This part, I'll come to that 1 second. I'll come to this part. Owned. This one, no goodwill. So this was in where, guys? Finance Act 2021. Brand new. So I was reading this memorandum explaining the Finance Bill 21 to understand why goodwill was removed. Guys, there were many cases which spoke about this goodwill being part of the assets, part of the intangible assets on which depreciation can be claimed. So if you see here, what the Finance Ministry tells here is, it is seen that goodwill of a business has not been specifically provided as an asset either in 2 clause 11 or in section 32. It is not defined as an asset. 2 clause 11 also defines asset, but goodwill is not there in that. Similarly, section 32 also, nowhere it says goodwill, it just says intangibles. Question of whether this is a part of the asset class on which depreciation can be claimed was decided in the 2012 case law, Smith Securities Limited. So the Supreme Court said yes, it is very much part of the asset and depreciation has to be claimed. But the ministry analyzed various other laws, for example, where the business reorganization is happening, or where the amalgamation, merger, demerger, all these areas, business reorganization, that is it. So when in that happens, no, when the business reorganization happens, later we will understand that depreciation on the asset, whatever was there for with the previous owner, same thing will come to me, and then I will split the depreciation between two parts, that is the old company and the new company. All that I will do. Then what is goodwill then? When a new company is taking over the old company, obviously they would have paid a bomb. Now that when I pay a bomb, I'll obviously pay a bomb to the shareholders. Where is it reflecting in the books was the question. So how can I take goodwill? Generally, in those cases, I was not taking any goodwill. So whatever block of assets, if the block of assets was, let's say, around 10 crore, same 10 crore used to come here. Correct? Same 10 crore used to come here. But there was no depreciation treatment there. So in many cases like business reorganization, etc., they have listed out, see 32, 32.1, 43.6C, 43.1, actual cost also. In amalgamated company, it basically the cost is whatever the previous owner had the cost. That's it. There is no element of goodwill there. So if you see, though the honorable court said it is a depreciable asset, in some cases, especially these reorganization cases, goodwill will be zero. Because the shareholders will get the valuation money, right? It will not be shown in the assets. And moreover, block of asset is just a thing on paper in Income Tax Act. So how will you add the goodwill there? Whereas in any other cases, when I'm buying the goodwill, yesterday I gave an example, MTR, I bought the name, brand name MTR. Now then it would be, I can count it. So why confusion? Why the dichotomy? Let me just, once for all delete that concept. That's the reason why amendment came. Amendment came here. Not being goodwill of a business or profession. They said not allowed. Got it? Not allowed. Not allowed. So businesses, the assets must be wholly owned by you. Assets must be wholly owned by you is what they say. Obviously, it should be wholly owned asset. It should be done that you should do the needful. Now let us say, let us say there are like 4 parties, P, Q, R, S. Each of them, let us say, have 25% holding or 25% share in a oil rig. They own a huge land. Let's say the Godavari Basin, one plant, the entire area they own. And they are in the business of letting out this land for companies like Reliance, etc., to come and do the iron ore mining, oil mining, and all these things. In the Godavari Basin, they have the entire stuff. So if I have this 25% each in all these things, I have, and there are 4 brothers or 4 companies, whatever it is, doesn't matter. So they have leased it out to, let's say, Reliance, 1,000 crore. They have leased it out, 1,000 crore. Each of this have a 25% share. Correct? Reliance now claim depreciation on this 1,000 crore. Example I'm giving. There are many such cases. One was, I think, Tata Steel, if I'm not wrong. The AO disallowed. Can Reliance claim, first of all? What are they buying? If they are buying this, what do you say? Right, then yes, that you leave. I'll come to that later. What about these people? These people. Let us say, instead of oil rig, I'll come to the oil rig example later when we discuss the intangibles. For the time being, leave it. What if this were to be plant and machinery? Selling plant and machinery. Or let me make it little easy. I'm leasing the plant and machinery. Who's the lessor? I'm leasing it. Okay, I'm leasing it. Who's the lessor? PQRS. P claimed 250 crore on depreciation on 250 crore. Q claimed depreciation on 250 crore. R claimed on 250 crore. S claimed on 250 crore. I will not be able to discuss the taxability of Reliance or Tata here because I have to do two other concepts. Let me not go there. Let me stick to these fellows to make you understand. P 250 crore, Q 250 crore, R 250 crore, S 250 crore. They want to claim depreciation on that. AO said, Poda, not possible. Why? Because the law says wholly owned. Many judgments came. One of the Supreme Court judgments also said, yes, you should wholly own it, only then depreciation. Government or the lawmaker decided to nullify those many Supreme Court and High Court judgments by adding the word partly. So even if you have partly what? Even if you have partly the deal, to the extent of the share he will get. This was an amendment made. They have added the word partly. The extent of his share means P will get 250 crore, Q will get 250 crore, R will get 250 crore, and S will get 250 crore. To the extent of their share, it will be there with him. It will be 100% valid. Hope you got this point. Correct? So that is what it is. And guys, it should be used for business. That is why if it is ready to use, no one will care. It must be put to use. When they use the word used for business, again, lot of judgments are there where they say, when I say used for business, it is not on a ready to use basis. It is on a put to use basis. Ready to use is what our accounting standards used to say before. Now, income tax, because of the use of the word used, it is put to use, not ready to use. It should be what? Put to use. It should be put to use. Put to use. Hope you understand. Hope you understood, guys. Yes or no? Thumbs up? Yes. So, I was asking that question that time, that whether is it mandatory to claim depreciation under Companies Act. If you want it for to pay dividend, it has to be adjusted after depreciation, section 123. After adjustment of depreciation, you have to do section 123, read with the schedule 2 rates. And my section 129 of Companies Act, first proviso, says financial statements should follow accounting standards, which also includes depreciation. This is in your paper 4, the old syllabus and new syllabus. I don't know what it will be. So here, that is one part of the story. But here, what about Income Tax Act? Guys, it was actually not mandatory before. Claiming depreciation was not mandatory. People were like, no, I'll not claim. Why should I claim? I'm not going to claim any depreciation. So there would be a building, right? So worth almost like 10 crore, he'll buy. He knows that this building going forward will fetch me a lot of money. So I will not put it into any block as such because it was not needed. It was not mandatory at all before. So the moment, obviously, rather than claiming depreciation every year like that, what he used to do is to keep it for, 4 or 5 years, sell it at a good rate, Claim indexation benefit also here. Indexation benefit in capital gain, you know that if it's long term, you can claim indexation. And LTCG tax is just 20%. Rather than selling the amount in the block, correct? And then when the goes to the block and then block amount, let's say is 15 crore and you're selling it for 100 crore. So the difference, obviously, you need to pay tax, and PGBP tax is 30%. Rather than that, I am smart. I will keep it separate and pay LTCG tax at 20%. This is what they were doing. To curb this practice, to curb this practice, in the year 2002, long time ago, for the removal of doubts, they said, bro, we never intended to not make it mandatory. We always wanted to make it. It was always mandatory. You are not following it. It is hereby declared that the provisions of this subsection shall apply whether or not the SSC has claimed deduction in respect of depreciation. I don't care whether you have claimed or not. It is 100% mandatory. You have to follow this. So, my dear friends, depreciation as per explanation 5 to section 32(1), mandatory. Got it? It is 100% mandatory. It would be 100% mandatory. So you see, page B7. The notes is designed in such a way that once you attend classes, you can close your eyes and study the material. Yes, you can close your eyes and study the material. But if you just read like that, okay, you may understand, but the structure with which you are following in such a way that once you do the classes and then sit with it, no, everything will, one line will finish, because it's, basically you cannot sit and study whatever we did full in depth, right? You will know everything and in the exam you'll just revise. That is what the beauty of the classes are. Classes you will understand everything. Then when you read the material, it should be understandable. You cannot sit and give everything in the material where basically in the end you will be left with some 1,000 pages to study. It should be, or like 2,000, 3,000 pages to study. No, it should be crisp, right? Crisp. One day before the exam, if you have some 700, 800 pages, quick, 10, 20, 20, like 40 pages per, hour. Quick, just quick. It should how it should be. So attend the classes religiously, sincerely. After that, it becomes very easy. Okay.